Compound interest magic. Picture yourself at a party where everyone brings a dish, but instead of just one meal, the food magically multiplies throughout the night. That's compound interest for you. You start with a little investment, and over time, the interest you earn begins to earn interest too. It's like your money throws a party, and each dollar brings a friend. The key is patience. Let those dollars mingle and multiply over the years, and you'll find your small contributions have grown into a feast of financial security. The beauty of compound interest lies in its exponential growth. Even starting with just $50 a month, over decades, that small amount can snowball into a substantial nest egg. Imagine investing $50 a month at age 25. By the time you retire at 65, you could have over $100,000 thanks to compound interest. Albert Einstein allegedly called compound interest the eighth wonder of the world, and it's easy to see why. The earlier you start, the more time your money has to grow. It's a powerful tool that transforms modest savings into significant wealth, all while you sit back and enjoy the party. Automate your savings. Imagine your finances as a lazy river at a water park. Instead of manually steering every turn, you just sit back and let the current do the work. Automating your savings is like setting up a current that flows straight into your savings account every month without you lifting a finger. It's the ultimate financial lazy river, turning saving money into a no-effort task. As the months go by, you might even forget about it until you check your savings and find a pleasant surprise. Automation leverages the principle of out of sight, out of mind. By setting up on automatic transfers from your checking account to your savings or investment accounts, you eliminate the temptation to spend that money. This strategy not only ensures consistent savings, but also reduces stress, knowing that your future is being taken care of without constant manual effort. Think of it as your personal financial autopilot, guiding you towards your goals with minimal interference. Plus, there are apps and tools that can round up your purchases and save the spare change. Imagine buying a coffee for $3.75, and the app rounds it up to $4, transferring the extra 25 cents into your savings. Over time, these small amounts add up, boosting your savings painlessly. It's like having a sneaky squirrel stashing away acorns for winter without you noticing. The latte factor. Let's talk about those small, everyday expenses that quietly drain your wallet like a stealthy ninja. Think about that $5 latte you buy every day. It seems harmless, right? But if you add it up, that's $150 a month and $1,800 a year. By making small tweaks, like brewing your coffee at home a few days a week, you can redirect those sneaky expenses into significant savings. The concept of the latte factor isn't about depriving yourself of all joys, but about being mindful of habitual spending. Small expenses, when accumulated over time, can significantly impact your financial health. Imagine if you diverted that $1,800 annually into an investment account earning 7% interest. In 20 years, you'd have over $70,000. Tracking these daily splurges can reveal surprising opportunities to save. Redirecting these funds towards investments or a savings account can make a huge difference over the years. It's all about balancing enjoyment today with financial security tomorrow. Additionally, think of other daily habits: snacks from the vending machine, ordering takeout, or those in-app purchases for your favorite game. These little expenditures add up. By making small adjustments, you can significantly boost your savings without feeling deprived. Diversify like a buffet. Consider your investment portfolio as a buffet. You wouldn't just pile your plate with just one dish, right? Diversification means sampling a bit of everything: stocks, bonds, real estate. This way, if one investment doesn't perform well, others can balance it out. Much like a diverse buffet ensures there's always something delicious to eat. Think of Warren Buffett, the legendary investor who never puts all his eggs in one basket. Balancing favors in your financial diet ensures your investments are healthy and robust, providing stability and growth over time. Diversification is about management risk. By spreading your investments across various asset classes and sectors, you reduce the impact of any single investment's poor performance on your overall portfolio. It's like having a safety net that catches you if one part of your financial plan falters. Diversification not only provides stability, but also opens up opportunities for growth in different market conditions. For instance, if the stock market is having a bad year, your bonds or real estate investments might be performing well, cushioning the blow. It's about creating a balanced portfolio that can weather the ups and downs of the market. Think of it like a balanced diet. Too much of one thing isn't good for you, but a mix of different foods keeps you healthy and strong. Mindful spending. Imagine your finances like a Netflix binge. You wouldn't watch every single show in one sitting. Mindful spending is about choosing what truly brings value and joy to your life. Instead of impulse buying that shiny new gadget, take a moment to ask, do I really need this? Or am I just caught up in the hype? It's like deciding to watch that highly rated series instead of scrolling endlessly. This approach helps you cut down on unnecessary expenses and focus on what truly matters, making your financial binge both satisfying and rewarding. Mindful spending is about aligning your expenditures with your values and long-term goals. It encourages you to prioritize experiences and items that enhance your life, rather than accumulate clutter. By being conscious of where your money goes, you can avoid the trap of lifestyle inflation, where increased income leads to increased spending without real added happiness. For example, instead of buying the latest smartphone every year, consider whether your current phone meets your needs. Or, before splurging on a fancy dinner, think about whether the occasion justifies the expense, or if a more affordable option would just be as enjoyable. This practice can lead to a more fulfilling life and a healthier bank account. It's about making intentional choices that contribute to your overall well-being and financial health. The gig economy hustle. Picture having a Swiss Army knife for your income. The gig economy allows you to diversify your income streams, just like a Swiss Army knife has different tools for different tasks. From freelancing to ride-sharing to selling handmade crafts online, each gig is a tool that adds to your financial toolkit. This hustle can pay off debts faster, build a savings cushion, and provide financial security. Embracing the gig economy can turn financial instability into a well-rounded, resilient source of income, giving you flexibility and control over your financial future. The gig economy offers flexibility and multiple revenue streams, making it a valuable tool for achieving financial freedom. Whether it's driving for a rideshare service, freelancing, or running an online store, these gigs can complement your main income and accelerate your financial goals. It's about leveraging your skills and interests to create additional income streams, reducing dependency on a single paycheck, and providing a safety net during economic downturns. Moreover, gig work can be a great way to monetize hobbies or explore new career paths without quitting your day job. It's like having a sidekick that supports your main superhero mission. The gig economy also offers opportunities to develop new skills, expand your network, and increase your overall earning potential. By diversifying your income, you create a more resilient and adaptable financial foundation. Living below your means. Think of your finances as a game of Tetris. Instead of stacking up unnecessary blocks, expenses that pile up to game over, strategically place each piece to create a clear line of financial stability. Living below your means isn't about deprivation, it's about smartly managing resources. Drive a reliable car instead of a luxury model, and you'll find yourself with extra money that fits perfectly into your savings and investments, creating a high score in your financial game. Prioritizing what truly matters can lead to long-term financial freedom and peace of mind. Living below your means involves making conscious choices that prioritize long-term stability over short-term gratification. It's about enjoying life while being mindful of your financial boundaries. This practice enables you to save and invest more, paving the way for financial independence. By focusing on what truly brings joy and value, you can lead a rich life without overspending, ensuring a secure and prosperous future. For example, instead of upgrading to a bigger house with every raise, consider if your current home meets your needs. Or rather than dining out every night, enjoy home-cooked meals with family and friends. These choices allow you to allocate more funds towards savings and investments, accelerating your journey towards financial freedom. It's about finding balance and making choices that support your overall financial well-being. Emergency Fund Peace. Visualize an emergency fund as your personal financial superhero. When life throws unexpected challenges, job loss, medical bills, car repairs, your emergency fund swoops in to save the day. This stash of cash provides peace of mind and stability, turning potential crises into manageable blips. Having an emergency fund means you're prepared for life's unexpected twists and turns, ensuring you're never caught off guard and can maintain your financial stability. An emergency fund acts as a financial buffer, protecting you from the stress of uncertainty and unforeseen expenses. It's recommended to have 3 to 6 months' worth of living expenses saved up. This fund can cover everything from sudden medical bills to urgent home repairs, giving you the confidence to navigate life's surprises without derailing your financial plans. It's the foundation of a resilient financial strategy, ensuring that you can handle emergencies with ease. Imagine facing a sudden job loss without an emergency fund. The stress and financial strain can be overwhelming, but with a well-founded emergency stash, you have the time and resources to find a new job without panic. It's like having a financial parachute that ensures a soft landing during turbulent times. This security allows you to take calculated risks and pursue opportunities without fear of financial ruin. Continuous learning. Imagine your brain as a financial sponge. The more you soak up knowledge about personal finance, the more equipped you are to make smart decisions. Read books, attend workshops, follow financial news. Continuous learning keeps you informed about new opportunities and strategies. It's like upgrading your brain's operating system to handle the latest financial challenges and opportunities, making you a savvy, well-informed money manager. Staying curious and informed can lead to better financial decisions and greater overall success. Continuous learning is crucial in the ever-evolving world of finance. By staying educated, you can adapt to changes, seize new opportunities, and avoid potential pitfalls. Whether it's understanding tax laws, exploring investment strategies, or keeping up with economic trends, knowledge is a powerful tool. This proactive approach ensures that you're always prepared to make informed decisions, driving you closer to financial freedom. Consider subscribing to financial podcasts, joining investment clubs, or taking online courses to enhance your financial literacy. Engage with communities that share your financial interests and goals. This not only broadens your knowledge, but also provides a support network to discuss strategies and share insights. The more you learn, the more confident and capable you become in managing your finances, paving the way for a secure and prosperous future. If you enjoyed this video, then make sure to check out our next video. Subscribe and turn on the notifications for the next updates.